we haven't even started.
Yeah.
We haven't even started. This is what's so amazing. So one is, when I say we haven't even started, so what I'm talking about there is the big cycle, my 14-year cycle, my 54, 68, 82, 96, 2010, 2024, which is still 3 weeks away. That's the beginning. That's the beginning of the middle part of the S curve, right? That's where we go from, 10% adoption to, and like we're at 11 now, to 90. It's going to be an unbelievable decade. I mean, unbelievable. So much fun. So it doesn't mean it won't be without volatility, but it's going to be fun. So that's the first thing.
Lately, there has been a notable surge in optimism among options traders, with many placing bets on Bitcoin reaching $50,000 by January. This optimistic outlook is fueled by the widely anticipated approval of a spot Bitcoin exchange-traded fund, a development expected to significantly boost Bitcoin's ascent. Fidelity Investments is playing a leading role in this movement, aiming to launch its spot Bitcoin ETF, known as FBTC, currently listed on the DTC's active and pre-launch list. This listing suggests a potential imminent approval by the U.S. Securities and Exchange Commission, positioning Fidelity as a pioneer in the race for the first spot Bitcoin ETF in the United States. Jurian Timmer, Fidelity's director of global macro, holds an ambitious outlook for Bitcoin, predicting its value could soar to over $1 billion by 2038. In a noteworthy dialogue, Mark Yusko emphasized the beginning of an extraordinary era in the digital asset landscape, with a focus on a significant 14-year cycle spanning from 1954 to 2024. This cycle marks a pivotal phase in the adoption curve, transitioning from a modest 10% to an overwhelming 90% adoption rate. The discussion also highlighted the ongoing crypto summer, characterized not by relentless growth but rather by a gradual upward trend. The video delves into Mark Yusko's bullish perspectives on Bitcoin and various factors that make the upcoming bull run in the next year highly anticipated.
We're still in crypto summer, right? Crypto summer is not straight up. Crypto summer is casually drift. And we've been talking about this since June.
I know.
We've been talking about this since June, that we were going to the low 50s.
You were more convinced than I was, to your credit.
I know. But it was just the way it happens. And Tim Peterson's model is the model, right? If you want to know the value of the network, you look at Tim's model and then you say, okay, well, if we're below the value, then who's buying? Investors who buy things below fair value. And we were going to creep. And it's been this, oh God, so beautiful. It's just a beautiful movement towards that low 50s. But then the halving is going to happen and fair value is going to double. And people are like, no, that's not how it works. I'm like, yes, it is. Because the difficulty adjustment aside, but the bottom line is the miners got to get paid. And so the fair value is going to double. And so then we're going to get to the beginning of crypto fall, and that's next June. That's when the parabolic stuff starts. And next Thanksgiving, oh my God, it's going to be crazy. I just can't even imagine how crazy next Thanksgiving is going to be. So that's why it's just beginning. And then on January 8th, right, the king is going to be crowned. Okay. It's Elvis's birthday. It's also my son's birthday, his 13th birthday. And the king is going to be crowned. And BlackRock's going to be approved on that day. First day, two bills, first day. Easy. I might be light on that. Maybe it's 3 bills. But at least 30 bill is coming in those first months. And remember, we went from 10K Bitcoin to 59K Bitcoin on 10 billion of flow into GBTC. So I don't, and that's the point, right? I'm giving credit where credit's due. Dan Moorhead, if Bitcoin is, I'll argue it is, digital gold, then we are 20%-ish of the way there. The monetary value of gold, the amount of gold that's in central bank vaults and, that kind of stuff. And if that's what it's going to become, and then can it be something beyond that? And then we got to get into, well, there's big B Bitcoin, and then there's little B Bitcoin. There's the network, which has some value, particularly as a settlement layer. And then there's the token, which I think could and should be this digital gold. But then is it also going to be a medium of exchange? We don't walk around with gold coins in our pocket. we leave the gold coins in the vault, and then we create this fiat stuff so that we can, exchange goods and services. If it becomes that, volatility will trend basically to gold volatility, which is not that high. I mean, it's not zero, but it's not that high. And it will become hoarded, just like gold, by the people that use it as the base layer of money. And maybe it goes a different direction, but if it goes that direction, I think we have a 4 more X, which, that's great, but it's not the moon, it's not 1,000X like some people think. Or there's some people say it's going to go up to infinity because the dollar is going to go to zero. I'm like, well.
Certain crypto analysts are entertaining the idea that Bitcoin might undergo a reversal in its upward trend following another upward move. One such analyst, Justin Bennett, conveyed his perspective to his 110,000 followers on the social media platform X. Bennett suggests that Bitcoin could experience one more upward leg before a corrective move. Supporting his analysis, he shares a chart illustrating Bitcoin's current trading pattern within a large ascending channel on the daily chart, with the horizontal resistance of the pattern positioned around $48,000. Bennett identifies his final target for this leg as between $46,000 and $48,000, anticipating a subsequent correction, emphasizing the critical $30,000 level as a must-hold point. Reviewing the trader's chart, it becomes apparent that Bennett envisions Bitcoin falling below $38,000 after reaching his upside target. In addition, Bennett asserts a notable stance. He claims that no one truly owns Bitcoin, providing his reasons for this assertion. The video delves deeper into Bennett's analysis, allowing viewers to hear his insights on the matter.
No one owns Bitcoin. There are 8 billion people in the world. Very, 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 very small number actually own Bitcoin. And part of it's because 3 billion don't have electricity with regularity, so they're not going to own it. Another 3 billion don't have a bank account. Think about that. 3 billion people in this world don't have a bank account. So they can't, buy things. And there's all these different reasons. Many have never even heard of Bitcoin, believe it or not, right? There are people who have no idea what it is. And when you start getting to the 100 million or 150 million, whatever the number is that actually do, it's this teeny, teeny, tiny fraction. And even those, right? There's a whole bunch of them are like, I'm not sure I believe it. I'm not sure it's an institutional asset. I'm not sure it's real. It still could be a Ponzi. It still could be a rug. Once the ETF happens and once venerated names like BlackRock and Fidelity and are here, forget about it. This rumor, which I think is a little disingenuous personally, but
a sovereign.
Yeah, about Qatar saying, "Oh, we should convert our whole $500 billion." Maybe they said that. I doubt it, but maybe they said it. Maybe it was a joke, but they're not going to do that. But would they do 10%? Would they do 20%? Every corporation, in theory, should listen to Michael Saylor, who's saying, if you have this devaluing asset just sitting idle, your cash, are you doing a disservice to your shareholders?
I'll push back against that actually, but I have
no. I will too, for the reasons that I don't believe Bitcoin should be all of your assets ever. I don't. But to have a portion that's deflationary instead of inflationary could make some sense. But my point there is, even when he did it and it was successful, then it wasn't successful, and now it's successful again. Not everybody else did it, right? Not everybody went and issued bonds and bought Bitcoin because they're afraid or they don't think that's a good fiduciary move, all kinds of reasons. But as this asset becomes more adopted, a couple things are going to happen. One, the volatility is going to shrink because remember, volatility is simply uncertainty about future outcomes. That's what volatility is. T-bills have no volatility because there's no uncertainty. In 91 days, you're going to get paid. And it's never not happened. And it probably never will not happen. I mean, maybe never is probably too strong, but there's no uncertainty. So there's no volatility. Amazon stock has really high volatility because there are people still today. Michael, I met somebody, they still said, oh no, maybe you said this.
I said this.
You said that.
Yeah.
No, that's right. But I actually met somebody too that said I don't buy very much on Amazon. I don't know that it's really what?
Bitcoin has frequently been likened to gold over the years. Initially considered a haven similar to gold, analysts are now scrutinizing both investments to determine if Bitcoin possesses properties qualifying it as digital gold. Over the past 5 years through November, Bitcoin's Sharpe ratio, measuring the difference between the risk-free return and the return of an investment divided by the investment standard deviation, has proven competitive compared to gold and other established asset classes. Jurian Timmer, Fidelity's Director of Global Macroeconomics, observes that Bitcoin's correlation to the S&P 500 has risen to 40%, surpassing gold's 14% over a 5-year timeframe. However, the correlation between Bitcoin and U.S. equities has decreased in the past 12 months, standing at 25% as of December 4th. Despite being more volatile than many assets, Timmer notes that Bitcoin's correlation with the S&P 500 has decreased, emphasizing the unique risk-reward profile of Bitcoin investments. In the past decade, institutional investors have consistently invested in Bitcoin funds, with weekly inflows reaching $132.0 million as of December 4th, according to a CoinShares report. The video concludes by prompting viewers to share their predictions for Bitcoin prices entering 2024 and inquire whether hitting a $60,000 mark by the end of the year is plausible, encouraging audience engagement in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.